Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have an edition of Bitcoin Bytes for you today. So in this video, I'm going to talk about Bitcoin, its current price action, and what to watch for going forward. Before I jump into the content, do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel, and of course, make sure you leave me a comment that helps the channel get more exposure. Also, today, special heads up, this Friday, I'm going to be releasing a new course on technical analysis. And that course, unlike my courses in the past, will be free for the first 72 hours. Now, that doesn't mean you join and have to pay after 72 hours. It means that everybody who signs up in the first 72 hours will get complimentary access to that technical analysis course. So if you would like to find out more about that course and be notified when the doors open, I will leave a link down in the description where you can join a Discord server that I set up specifically to give notifications about that program. So instead of talking about the market as a whole today and talking about all the different stories out there, I'd really like to just focus on the charts and see if maybe we can keep this video under 10 minutes. So I'm going to start by looking at a Bitcoin daily chart, and not a lot has changed on this chart, which is to be expected. It's a larger time frame. It's going to take some time to play out. We're still underneath this yellow demand box that has now flipped to supply. The bulls have not yet been able to take that out. We are seeing a couple of tails showing up, one here and one here. So those are signs that the bulls are at least showing up to the fight. But unfortunately, we're not seeing real high volume. We're seeing mostly sell-off volume here. This, again, is not necessarily a bad thing for bulls when you have increasing selling volume. The myth is that increasing selling volume means that it's bearish. That is absolutely false. Increased selling volume at the beginning of a move down does in fact indicate, yes, strength on the bearish side. But increased volume after a move down oftentimes is the end of the move. It's literally telling you that the move is wore out and that people have capitulated from that side of the fence. In this case, that would be bulls capitulating. And oftentimes when the bulls capitulate, that's where the market decides to pivot. So this is not necessarily bearish, having high sell volume like that. In fact, I view it as the exact opposite. It's probably more bullish than anything. Unfortunately, we're not seeing the follow through, and that's where the problem comes in. We're not seeing people going, crazy, gobbling up this crazy good deal, so to speak. And if you compare that, for example, back to March of 2020, which was our last major capitulation event, well, say you had the huge red candle followed by an even bigger green candle, and this signified that a lot of people were super interested in owning Bitcoin at these levels. We are not seeing that in 2022. Seeing a lot of, hesitation. It's not terrible. It's not that there's no volume. It's still decent volume. It's just not on those same levels as what you might expect. I still tend to believe that this is a very dangerous position right now for bulls and bears. I think that this is probably what I would call a coin flip trade. If you're trying to get into a new position, either long or short, I do view this as more of a 50-50 thing. It could move up from here, it could move down from here. Now, we're not talking about macro time frames. We're not talking about macro bottoms and things like that. I'm talking about it in the short term. I think there's just as much chance that this goes back up temporarily as it goes down from here. So for me personally, this is not a position that I'm really looking to trade. I'm really sitting on the sidelines, at least on the larger time frames, and waiting for this to develop. Now, that being said, I still have some, well, very few actually. I was going to say I still have some puts, but I closed most of them on that drop down to around 15, 16,000. So I guess no, I just have a couple of really small puts on Bitcoin, and those are for, I believe, December. So yeah, not a lot left on the put side. I'm almost neutral on Bitcoin as far as trading goes. So that's what I'm seeing on the daily chart, just a lot of, indecision. So we can take just one quick peek at the CME chart. It's not really that big of a deal, but we did have all these gaps along the way that I talked about a few years ago that, very likely those gaps would eventually fill in. We do still have this gap sitting down here. This is a daily chart. that gap from down around 9,600 bucks. It never did fill in. It's not the biggest gap in the world, but I still suspect eventually that's going to get tagged. We do have this measured move down pointing to around 12,000, so that's still in play. But again, CME is basically just like the other charts. This was a level of support. It got breached. So it's very common to come back up and test that. And really, until that's tested, it's tough to say what happens next. If it's tested and moves through it, then it'll flip back to support, probably start moving back up, maybe looking to retest the top of this range or even higher. If it can't flip that back to support, then it's probably just going to go ahead and head back down to at least 12,000 from there. If we take a look at, let's look at this chart real fast. This is a chart of Bitcoin versus the QQQ. This is that chart that usually when I'm talking about it, it's mocked up with that market cycle chart. I'm going to take that off today and just kind of talk about the technical analysis of this. If you really think about what's happening, again, this is a monthly chart. We can see that the initial drop back in March of 2021 came down and retested the 2017 highs. We got a really nice reaction bounce off of that, or dead cat bounce, to put in our complacency bounce, and we've moved back down, and all we've done is very, very cliche. We've moved down to the next major area of support, which on a monthly chart is the summer of 2019. And we are literally sitting on that level right now. So again, it would not surprise me to get some type of move from here. When I look at this chart through here, this just has so many earmarks of a bear trap. See how you range sideways. The market really should have moved back up, at least in some kind of dead cat bounce, but it didn't. Instead, it went down lower. Oftentimes what that is a bear trap. You'll trap bears down here. The larger players will use that bear liquidity to fill their long positions, and then you'll get your bounce. And again, I'm not saying new bull market. I'm not saying anything of the sort. I'm saying a move up. It's likely that move up will be a counter trend rally, or what you call a dead cat bounce, but we just have to wait and see if it starts to happen, right? It's very likely to get up to this area and probably fail somewhere in this zone before moving back down from there. A really, really good example of a bear trap like this, you really want to watch for these. A really good example of this is going to be if you go back to October of 2019. A lot of people, I used to talk about this quite a bit, a lot of people got burnt on that pump. I was one of the people. I was actually looking for the dead cat bounce. I was right, but I got short too soon because instead of waiting for the setup, I was trading like overall, I don't want to call it price action. I guess it was kind of price action. Look, it was a mistake is what it was. I'd only been trading for a little over 2 years at that point. I had a really good thing going. I was making really good money in 2019 with trading, and I think I just got a little bit overconfident is what really happened back there. I called the bounce, and so then when it started to bounce, I was like, oh, look how smart I am. And so then I thought, I could tell the future, and got short way too early and got wrecked. But this is what I'm talking about. See how it just ranged through here? Is like ranging. And I was posting on social media saying, look, we're probably going to bounce back up from here. Going to retest these old zones around 9,000, 9,200. Okay, so it started to move back up, and I'm getting aggressively short, and it just kept going. And I literally ended up getting stopped out right about there. I mean, just past 10,000. I got smashed, ended up losing I don't remember the exact number right now. I think I lost $7,000 or $8,000 that day. It was a pretty brutal day. I mean, it's not the worst day I've had ever. And of course, as you trade with larger sizes, it's all kind of comparative, relative, whatever you want to call it. But at the time, it was a very, 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 very bad day. I want to say it was closer to $8,000 I lost. And it was stupid. All I had to do is wait for that candle to close. It closed right where I called it, and then I could have got short and rode that down for a big payday. Now, I did get short again after it came back down, and I did make back some money, but yeah, it was just stupid. You don't want to be in a position where you're trading to get even versus trading for profit, and that's what happened. But the point being, if you look, see that? They sent it down, they trapped the bears, they sent it up, trapped the bulls, and then let it collapse. And that looks eerily similar to this. Put on a weekly chart, it'll be even easier to see. See how similar that is? I'm telling you, it's got those earmarks. I can't predict the future. Lesson learned on that one. I can predict probabilities and things like that. And this really, really just has that same feeling to me as, man, it's moving down. You got that nice smooth channel. You get that kickback up to this area or even this area up here somewhere. You're going to have a lot of bears who are going to be getting liquidated. And you're going to have a lot of bulls who think this is the market bottom and start getting long. And then those same people who were long down here and made a bunch will turn around and get shorts, or potentially will turn around and get short and then ride it the next leg down. So be very, very careful. And now the video is over 10 minutes. I got to rambling about this, so I guess it's as good a place as any to really wrap it up. I mean, there's not a whole lot to talk about. We're just going to have to wait and see what happens here. Just like in the last video, I want to stress to you that right now is not the time to be trying to get rich. Right now is the time to really make sure that you're using proper risk management. We still don't know for sure what's going to happen, if there's any other exchanges that are actually insolvent and haven't bubbled to the surface yet. And also in the stock market itself, I don't want to go start looking at stock charts. The video will get too long. But also keep in mind that the stock market itself is still technically in a bear market, still technically in a downtrend. Until the stock market starts putting in bullish structure and actually putting in higher highs and higher lows, we have to be very careful of being overly bullish on any asset. So that's it. I'll go ahead and wrap up there. Again, just a quick reminder, there will be a link down in the description, and that link will take you to a Discord server that you can join. It's a free server. It's not going to be a Discord that I keep up with or anything like that. I'm just using it to notify you when the doors open to this free course that I'm doing. And again, everybody who joins in the first 72 hours will get complimentary access to that course. So if you have been wanting to learn technical analysis, or if you've learned it from other people and haven't had any luck with it, be happy to teach you my way of doing things. I'm not saying I know more than anybody else, just saying I've got almost 6 years of doing this, and my way works for me and seems to work for many of my students. So my technical analysis obviously is a little different from your standard run-of-the-mill, rehash content that you can find all over the internet. And that probably comes down to the fact that most of the TA that I use, I learned through trial and error versus going out and buying a book and then just, regurgitating what I read. A lot of the stuff that I've read on technical analysis is flat out nonsense and does not work in real life. For example, high volume when it's moving down is bearish. High volume when it's moving up is bullish. Not true. It depends on the situation. For example, people will say, you can't use overbought RSI. You can't use oversold RSI for anything. Not true. There are situations where being overbought or oversold actually means something. The irony is being overbought in a bear market is a really, really bearish sign, but being overbought in a bull market, for example, is actually a bullish sign. I'll give you the perfect example of this right now. Go back to 2019, put it on a daily chart, and look at the bottom, and look at when it broke out in the summer that year. Oh, I went back too far, and the video is getting too long. I'm going to have to hurry. See this? Imagine that you were shorting that just because it was overbought. Well, it's overbought, I should short that. You'd be really sad if you shorted Bitcoin at $4,900, right? I mean, it ran up to almost 14,000 right after that. That was actually a bullish sign because you had a high volume candle breaking out of a range and went into overbought. Relative strength, that's what RSI stands for, relative strength index. It was relatively strong, and it was a good sign. Now, if you got this exact same thing, in a downtrend, tiptoed into overbought territory in a major downtrend, this is the downtrend from 69,000, came up on the day cap, bounced around 48,000, and what happened? More downside. You would not have wanted to buy that. But you can see, it didn't look anything like that other candle. You weren't on a breakout with high volume, big, thick green body candle. It was this little dinky spinning top candle. It was like sitting right around the top of a range. Like, you got to put all those pieces together. And so much of the technical analysis that is taught in books and through courses and through social media, it's the same rehashed stuff that it doesn't talk about these things. Like, context matters a lot, and you can have the exact same pattern, but the context in the market determines whether or not that pattern is bullish or bearish. So those are some of the things I'll talk about inside that course. Again, everybody who joins in the first 72 hours will get complimentary access. I'll be opening the doors probably this Friday, which if you're watching this video later, this Friday is referring to November the 18th, I believe is the date on that, 2022. So make sure you check the links down in the description. You can jump into that. Also, please remember, I'm some guy, I'm sitting in a spare bedroom. That means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Go ahead and give the video a thumbs up now, subscribe to the channel, and do not forget, leave me a comment. You guys did really, really awesome for me in the last video. I really appreciate that. Please do that again in this video. Let's see if we can get this channel blown up. The more subscribers I have, the more content I can do, and obviously that's good for everybody, at least in my opinion. This is James with Crypto Common Sense. Reminding you, please trade safe. I'll talk to you soon.